All right, guys, how's everyone doing? This is Paul Singh, the market speculator with bullsonwallstreet.com. Let's take a look at the market with the free weekly swing trade report with the week ending June 17, 2022. We're going to game plan for the coming week, talking about a setup in the market that's really coming into play right now. It's a rubber band setup. We're going to talk about market sentiment. We're going to talk surprisingly about China stocks, which we haven't been talking about much. We've been staying away from them, but the opportunity is so good right now. We're going to take a look at that. And then we're going to look at a few stocks and ETFs to get ready for the coming week. You've got my contact information right here. Contact me anytime. And of course, bullsonwallstreet.com. We got a lot of different things: day trading, swing trading, a bunch of other courses. I run the swing trading services. So if you're interested, take a look. We have a report that comes out daily. We have the chat room. We have alerts that come out. And of course, the daily analysis. But let's get to it now. The market rubber band setup. Let's take a look. Let's pull up SPY here. That's what I usually look at to identify what's going on in the market. We've talked about this before. Basically, what we are seeing here is an overall topping pattern, a bearish topping pattern that shows no signs of ending at this point. So who knows where this thing is going to go or when it's going to really truly reverse. But in the meantime, you have these down moves to play, but you also have very powerful bounces. In fact, these bounces are more powerful than many of the bounces you get in trending markets. Let's just take a look at these bounces here and compare them to the bounces that came during this big market trend here that we came out of. And actually, these bounces are stronger than some of the bounces in this trend here. And that's what happens in bear markets. You can get these very powerful market bounces, especially when the market and stocks are extremely oversold. And we're getting to that point now where we can start looking for this setup. Essentially, we're looking for something that's really beaten down and then looking for a reversal. In the report, we get more specific on exactly what we're looking at. But for now, just know if you see things really extended, you got some indicators that will show you oversold conditions, or just look at price action. We're getting there now. So that's what we're looking at next week. We're not really taking shots today, but next week, if we see another leg down, we're going to start really paying attention to bounce plays. So that's SPY. We have the Qs here, and we have IWM. And then what we would probably do is trade the leveraged ETFs in these things. Even something like ARK, which is a growth ETF, really beaten down here, and there's a lot of potential for this one as well. So that's where we are in the market. Let's look at market sentiment. There's a lot of different indicators we look at, but an easy one to look at is CNN's Fear and Greed Index. And I usually don't like to use a kind of blanket standard, retail kind of indicator like this. But this one's really good because it measures a lot of different things that I'd be measuring on my own anyway. Market volatility, put and call options, stock price breadth, strength, and so on. And so this is a really good indicator, and we are at extreme fear on this indicator. So that's a good sign. When we're playing a rubber band bounce, we want to see fear in the market. That's usually when you get that bounce. But usually I like it to be even more extreme than it is right now. So next week, if this thing could hit even lower, I think that'd be a very good sign for us. So we'll be definitely watching out for that. Now let's look at China. So what I'm going to do here is pull up the China ETF, FXI. And as you can see here, it is very beaten down. You can see here in 2021, about a little over a year ago, this thing was trading at about 55, and now it's at 32. But we have potentially a bottom formation here. You can see here we made a low, we made a higher low here, and now have remounted the 50-day moving average, have a nice consolidation here, and good volume patterns. And it's even more pronounced when we look at some stocks. Let's pull up, one of the ones that everyone watches when we're looking at China, and that's BABA. And we can see here even better, even more clear here. Look at that nice bottom formation here. We have kind of this W pattern, consolidation above the 50-day moving average. And then look at all this nice volume as we retested lows. definitely we're seeing accumulation here. So we are watching China stocks. We've got a list of about 10 or 15 that we're watching. Baba's a good one here. Another good one here is Billy, which is maybe even a nicer pattern. Maybe a little bit of riskier stock here. Go-To, really good risk reward here. The open gap here is all the way at 10, and it's a $2 stock right now. Now, keep in mind, there's some inherent risk with China stocks, which is probably why they're beaten down so much. If you just Google China, Taiwan, all of these articles are coming out from the last 1 or 2 days. U.S.-Taiwan policy overhaul. U.S. senators propose bill to counter Chinese threat against Taiwan. So it is a little dicey. And know that if you're entering, manage your risk well, take small position size. But the risk reward is really good on some of these things. So we will continue to watch these and potentially trade them. Okay, all right. And then finally, let's look at some stocks. I'm having a little bit of issue here with my TC2000. But let's go ahead and look at some of these stocks. All right, guys, in the middle of the video, I had a little bit of an internet issue, but let's get back to it. We got through the China stocks. Let's talk about the weekly focus list. We're looking at SPXL, TARC, BABA, Billy, CCL, and Amazon. Obviously, in the report, we're looking at a lot more stocks, but let's take a look at these. SPXL essentially is trading off SPY. If we look at SPXL, really beaten down here at 61. Again, I'm looking for another leg down, which would come into the support range back in 2020. Let's say SPXL got down to 55. We could enter with maybe a 2-point stop, 2 or 3 point stop, and a target all the way maybe up to 70. So risking 2, 3, maybe 4 points for potentially 15 points. That would be a really good risk reward. Let's look at TARC, which is the ETF for ARK. And again, you can see the same thing. Let's say we entered around 1650. We have a stop of 1 or 2 points. Maybe we could target up here around 24. Really good outsized risk reward. We already talked about BABA, but that's one of the stocks we are looking at here for China stocks. Again, nice bottoming formation. We could target all the way up here at this open gap around 160. Maybe that's a little ambitious. Even down here at this range at 137, that would be about 30 points on potentially like 4 or 5 points of risk. So if China stocks started to move, these things could really fly and get to where they were just not too long ago. Billy, essentially the same pattern. And then we haven't really paid attention to reopen stocks in a while, but CCL, cruise liner here, really beaten down. This thing was trading at 24 not too long ago. It's sitting at 950 right now. So let's not even say there was another leg down, which we're actually waiting for, but let's say we entered here at 957, place a stop of about 80 cents. Let's say the top of this range here is at 14. We're talking about, let's say, even $1 of risk for potentially 4 or 5 points of gain. So CCL looking really good as a potential rubber band setup. And finally, Amazon here, maybe not quite as beaten down, but still, this was recently trading at 170. We're at 105 now. Entry at 105. Stop maybe around 5 or 6 points, a target at the top of the range around 130. Again, we're talking about 25 points on 5 points of risk. So we're seeing this across the board, a lot of maybe not high probability trades, but really good risk reward. Where if you just hit a few of these, at 4 to 1, at 5 to 1 on your risk, potentially really good trades. All right, guys. So that is it for this weekly swing report. Next week, I will probably do a Coffee and Stocks with Paul live, either Saturday or Sunday, so be on the lookout for that. And of course, you find me on Twitter, Instagram, and of course, bullsonwallstreet.com.